welcome everyone. This is really a pleasure to be here for moderating this session on a topic that is very close to my heart. I am very delighted to see a set of sessions on outcomes at this conference. I think this is really where the rubber hits the road, where you get a chance to see whether the policies that you have in place are really yielding the results and the impact that you intend to see. So without further ado, let me present, first of all, maybe a few housekeeping items. You are all muted, so if you want to talk or if you have some interventions during the session, I encourage you to either use the chat or the Q&A, and we'll make sure that we get through your questions. And then the session will also be recorded if you need to access it later on. So without further ado, here are the panelists. We have a great set of speakers today that are going to bring a very wide range of experiences, both from a geographical perspective with some experiences from Zambia and Peru, and also at the global level with the AFI and CGAP. So first of all, let me introduce you to Luis Trevino, who's Senior Policy Manager at AFI. Luis, if you could say a few words.
Thank you so much, Isabel. Do you hear me well?
Yes, we can.
Thank you so much. Well, thank you. It's really for us. Well, as mentioned, my name is Luis Trevino. I'm the Senior Policy Manager of Financial Inclusion Data in the Alliance for Financial Inclusion. First of all, let me thank the European Microfinance Platform for the opportunity to share with you the AFI experience and some lessons learned. For those who are not familiar with AFI, AFI is a network of more than 100 financial policymakers and regulators, and we are focusing on promoting and enabling policies on financial inclusion right around the world. We are in we have our network. Our members are institutions from more than 90 countries. Especially on the developing world, and and today I will be presenting more the experience from our network in terms of developing measurements on financial inclusion to drive evidence-based policies, right? And we are talking about financial inclusion policies that are so important, especially now in these days after this COVID-19 pandemic.
Thank you very much, Luis. So next, I'd like to present to you Stella Nkoma, a gender specialist at the Bank of Zambia. Stella, please say a few words.
Hello, everyone. As Isabel said, my name is Stella Nkoma. I'm the gender specialist for the Central Bank of Zambia. That's in Southern Africa, for those of you who might not know where Zambia is. And I'll be bringing the perspective of how Bank of Zambia uses data for policy making as a regulator. And yeah, I hope that the presentation will be interesting for you and yeah, get you to think about what are the types of things that Bank of Zambia is doing with data. Thank you.
Thank you very much, Stella. Next, Juan Carlos Izaguirre, Senior Financial Sector Specialist from CGAP.
Thank you very much, Isabel, and thanks to the European Microfinance Platform for inviting me to this important and interesting session. My name is indeed Juan Carlos Izaguirre. My pronouns are he, him, and I'm Senior Financial Sector Specialist at Consultative Group to Assist the Poor, or CGAP, a think tank on financial inclusion housed at the World Bank, working with policymakers, regulators, providers, and consumers to improve financial inclusion. And I'm leading supervisory work in digital finance and financial consumer protection focused on outcomes. I'm from Peru, used to be a supervisor in Peru, and been working with the World Bank Group for more than 13 years now. Thanks, Isabel.
Thank you very much, Juan Carlos. So that's a nice segue to our last speaker, Mariela Zaldivar, who comes from Peru, who's the Deputy Superintendent. Mariela, please.
Yes. Good morning here from Peru. I'm Mariela Zaldivar. I'm Deputy Superintendent of Market Conduct and Financial Inclusion. I work at the Superintendencia of the Banca Seguros y AFP, that is the Financial Insurance and Private pension funds regulator and supervisor. I worked there for more than 20 years. I have a prudential and market conduct experience in terms of regulation and supervision. And thank you very much to give me the opportunity to share Peruvian experience.
Thank you so much. Great panel. Let's get started. So first, Luis, let's turn to you. We'd like to kick this off with setting the stage with the experience from FE. I think that many of you in the audience are very familiar with the wonderful work that FE has done over the last decade. And so I'll hand it over to Luis to walk you through more details on their data framework work, and more specifically also the work that FE has been doing on sex-disaggregated data management.
Thank you so much, Isabel. And indeed, yeah, and I forgot to mention one of my objectives today is also share the experience, especially on evidence-based for measuring women financial inclusion and the gender gap. And this is through the financial inclusion sex-disaggregated data. So starting, please let me just share the data or the measurements framework that we have been developing in the network in terms of measuring financial inclusion. So one of our main, I think this is important to start with the beginning, right? Which are the main dimensions that we have been focusing as policymakers to measure financial inclusion. So starting with the dimension, the first thing to start with was on access, right? In terms of location and geographic, where are the financial services located, the financial institutions, branches, ATMs, points of services, right? But we have been expanding this because the dynamics of financial services has been exponential, right? So this also in terms of access also has been exponential. We have also been focusing on uptake, that is more focused on financial channels, and then on usage, right? That it's in terms of how do we as individuals and enterprises, SMEs use financial services for, right? And this is basically payments, savings, borrowings, insurance, and but also investments and pensions, right? And very important is the dimension of quality, right? It has been also a focus in the network to also try to measure and keep track of the quality of the financial services, because we cannot promote more financial services without thinking on this important aspect, right? Especially for more than the 1.7 billion that according to the last Global Findex are still, or have one in 2017 were unbanked. We don't know right now the exact figure now, but quality is essential, no? In terms of the reliability, security, that it's also in terms of policies, it can be translated into consumer protection measures, right? Accountability, and since we are focusing more and more in the financial services and the use of data, also aspects of data privacy and financial capabilities. How the main focus of the subjects of financial inclusion, who are individuals and SMEs, are using this. So a bit of background in the Alliance for Financial Inclusion Network. Our policymakers started since the beginning of the creation of AFI more than 10 years ago in 2010 to focus on this, on really founding, developing policies based in evidence, right? So in 2010 there was an accord among the network, the financial institutions, to really start developing a measurements framework and drive policies based on measurements and so on. And then, conforming the years passed, it was, our network also noticed the importance of gender, right? And the gap that exists between men and women in terms of access and usage of financial services. So there was also an agreement to focus on women financial inclusion and enabling, promoting financial services specifically for the women needs, right? And this has been, and this emphasis has been translated into a kind of a theory of change, right? In terms that we have realized as a network that the women financial inclusion really empowers women. It's having access to financial services and to good quality financial services increases their economic well-being, allow them to establish, achieve goals in terms of being independent in terms of SMEs, right? Allows them to better manage their savings, their borrowings, and it's at the end it's a catalyzer towards a more independent, right, and economic empowerment for women. So in that regard, we have been, our mission it's very much aligned to all the SDGs, the Sustainable Development Goals, and especially on the SDG 5 that it's focusing on women. And as you can see, in the last 10 years of measuring financial inclusion, and we have one of the best measurements at the global scale, that it's the Global Findex, right, developed by the World Bank. It's we have seen there's the gender gap between women and men in terms of access to financial services has remained persistent, right? So in 2011, you can see, in average was 10%. In 2014, 8%, but then in 2017, it remains in 9%. So even though there has been an increase on financial inclusion, for men and women, the gender gap, the difference in access to financial services and usage of financial services has been more or less has persisted, right? So that's where many the policymakers and all, but also on the global level, there is a really interest to address this, right, and find better ways to bridge this gap between men and women in terms of access to financial services. But this can be done only through better measurements to allow everyone, right, policymakers, but also financial service providers and other stakeholders to really be aware of where is this gender gap, right? And in our theory of change in terms of measuring this gender gap, we have been, we have been developing this as a step approach, right? Step-by-step approach. So starting with the measurements in the demand side, from demand side surveys as the Global Findex or national surveys that allow to measure, compare access to financial services between men and women. And identify what the gaps, so the real pain points in terms of difference between men and women in access, and then continuing this to a more granularity to also measuring through in a more frequent way this measurements on access and usage of financial services through administrative data, right? Supply side data. So in the network, we have been working in toolkits and measurement methodologies to allow policymakers to increasingly measure in a more accurate way what is the financial inclusion in access, usage, and also segment the data between men and women. And this has not been, it has evolved not only in terms of access and usage of financial services, but also other aspects as diversity, aspects as of measuring, understanding what are the financial products and how the needs of women are met. And through toolkits, we have been developing this framework, right? In terms of first identifying what the data needs, the objectives from policymakers. Policymakers have many different objectives. So and there's a lot of requests of collecting data, especially when we speak about the supply side and requesting data from the financial service providers. But so it's important to be very clear on what are the objectives, what are the data that is needed, agree on the best tools and the better approach to measure this, have a very an open and consultative approach to allow other regulators and also the data reporters or the financial institutions that report the data to be able to collect very effectively this data, address some challenges that exist, because there are some challenges when we need to, as policymakers, change the methodologies, request more data. The requesting more segmentation sometimes can be a challenge for some institutions, because they need to modify or change the way they collect the data, right? So we need to the collaborative approach and find the best solutions is crucial. And then once there is an understanding, we define new templates for collecting data on new systems, then piloting, validating the data, and then using it. Right? This is the most critical part, because it's how do we, as policymakers, disseminate, share this data to other financial service providers, and identify some opportunities to develop policies. Can we go to the next, please? So, but also, going beyond data, we have been, evolving in the network. We have also been conscious that it's important to, when we develop and establish some policies, we need to also establish a framework to monitor and evaluate these the activities that we are developing, right? So we have also been sharing experiences and developing tools to allow our members to establish monitoring and evaluation tools and frameworks to drive the policies, the development. It's something with developing a robust theory of change, of what are the activities that are needed to have an expected outcome and objective, right? In this case, for instance, reducing the gender gap or advancing women financial inclusion, establishing specific measurements at baseline, but also then specific targets, and linking these targets with specific policies that can really make this change, right? And this can also be some challenging, right? It's not, sometimes it's not it's not direct the relationship between one policy and enabling women financial inclusion, for instance. But I think with the experience that we have been through, we are increasingly identifying these opportunities, right? In terms of policies, of policies that really have an impact, and how to measure this impact, right? It's really critical. So I think this is very well aligned with this session, that it's based on outcomes-based approach.
Great, thank you so much, Luis. And we're running out of time, so I wonder if you could just go very quickly through a few examples of countries you've worked with, and then we will get into more details on the case of Zambia with Stella from the Bank of Zambia. So just 30 seconds.
Thank you. Thank you. Well, there are some cases, and there are here some of them policies that have been implemented in different angles to enable women financial inclusion from the SMEs, right? Like collaterals, in terms of borrowing, that is very important. Data can allow policymakers to have a more accurate testing in terms of risks management, and for instance, in Mexico, they have been able to lower the capital requirements for woman-owned loans. I think this is one of something very important. Other policies, like digitization of village savings and loans associations. I think that's also one policy that has a direct impact for women financial inclusion. And the data that has been able to be recovered in terms of savings has allowed to establish, also for the financial service providers opportunities, right, to invest and have these changes. I think this.
Well, thank you so much, Luis. So I think those slides will be available to people after also the presentation, but we do need to move on to Stella. So thank you so much for sharing the work of FE. I think there's so much information in there and so much research also that people can go reference. So now I would like to hand it over to Stella, who is going to walk us through the experience of the Bank of Zambia and using sex disaggregated data also to improve, to incorporate it into the National Financial Inclusion Strategy of Zambia and improve outcomes for women. So Stella, handing it over to you.
Okay, thank you. So we could just go right ahead into the presentation because I think you've introduced it already. So for Bank of Zambia, really what we've been looking at is looking at how we can have better financial inclusion for women and how that will help us in terms of our economy and reducing, different inequalities. So Bank of Zambia, together with other regulators, we have the telecoms regulator, the pensions and insurance, and the Securities and Exchange Commission. They're the main users of the supply side data that we have, and they also play a key role in using that data for policy making. So we use both a combination of supply and demand side data that helps us, finalize our indicators, and that's what we use. And our main document and guide around the National Financial Inclusion Strategy. So the National Financial Inclusion Strategy is using this data at the policy level, and we've come up with indicators, and we did have a baseline, and it's helping us in terms of guiding the nation on policy issues relating to sex disaggregated data. We can go to the next slide. Yeah, so so we have the framework for the collection of sex disaggregated data in Zambia, and actually AFI, with Louise, have really worked a lot and helped Zambia in terms of, sorting out our data needs and finding out what's on the ground and what we can do in terms of satisfying what our particular data needs are as a country. And so, so we had the FinScope survey, like I said, and it really helps us determine the levels of access and financial products and services of the adult population. So the adult population in Zambia is considered from the age of 16 and above, and it helps the FinScope helps us, in terms of looking at what type of demand side data we could get. So we've had 3 cycles of the FinScope. So we had the FinScope in 2009 and 2015, and recently the most recent one was in 2020. And it's been able to help us capture a lot of the important aspects of the gender gap and women's financial inclusion evolution in Zambia. So basically, the FinScope really has shown a lot of positive progress when it comes to reducing the gender gap, like from 2009 to 2020. There's been a lot of progress. And I think one of the biggest drivers of that progress has been the use of mobile data through our mobile phone companies. So our mobile money, mobile transactions have really increased exponentially from 2015 to date. What we've seen really is that there's remarkable progress, like I've said, and 58.5% of women are now financially included. And this is compared to 33.3% in the last FinScope. So I think there's really been a lot of improvement. And one of the key targets, actually, even in the Bank of Zambia strategic plan, is to have the 9.9% difference by 2022. So we're hoping to do that so that we can see, that trend improving as the years go by. So in terms of the supply side sex disaggregated data, we've already looked at the demand side. So the supply side sex disaggregated data. So what we're measuring is access and usage of financial services. And we have different sources for this supply side data, but basically we're using the banks, the non-banks, and like building societies, like insurance companies and things like that. And then also payment systems businesses. And I think as a regulator, we have the power, and not only ourselves, but we also have authority from the Banking and Financial Services Act and the National Pension Scheme Authority as well. And of course, the other regulators that I mentioned at the beginning of the presentation as well. So that's where we are in terms of that. And we've worked with AFI, like I said, to collect the supply side data. And what has happened is that we've been able to, we were able to have a baseline that actually looked at what the situation was, and that was in 2018. And now we're building on that. And given the baseline that we had, we developed a framework, and that framework is now being used by the banks to collect information, and it's linked directly to the Bank of Zambia system. So we get that information so that we're able to look at, you know, loan repayments, account openings, usage, and things like that. And we're able to track and see what the changes are using that information. And you can go on. We can go to the next slide, Isabel. Thank you. Isabel. Thank you. Yeah, so so basically this is just an eagle-eye view of the National Financial Inclusion Strategy. And it just looks at the vision, which is universal access and usage of a broad range of quality and affordable financial services. And then we have 4 drivers for our National Financial Inclusion Strategy. So the first driver is widespread access and accessible delivery channels. The second is diverse and innovative customer-centric products. And then the third being finance for SME growth, and then financial consumer protection and capability. And then we also have some enablers. And the reason why I've actually put the third on top and the first on the bottom is that the third is the foundation of it all, so to speak. So that's the financial infrastructure. And then obviously the policy and legal environment and the supervisory capacity from the regulators' point of view. And then the public and private sector commitment. Because I think for enabler 1 around the public and private sector commitment, I think this is really important because as a regulator, there are certain things that banks have to do. And some things like collecting sex-disaggregated data was not mandated before. And so when we started working with the banks from 2018, I think we really needed that commitment to be able to get the banks to start, you know, going outside of what they usually collect to be able to collect this data so that we were able to use it. And we had to, you know, have a really strong business case for the banks to know why is it important to collect this disaggregated data and how can they use it in terms of their bottom line as a bank. You can go to the next slide, please.
Okay.
Yeah. And I won't really go into too much detail, but just the former one, please, Isabel. Yeah, so I won't, I think you'll be able to access the different indicators that we look at, but you know, we're looking at SMEs with a loan or line of credit, access to finance, you know, the percentage of adults with low product awareness levels. So it's different. We're looking at different things. And our target really is 2022 when this will be reviewed and we'll be able to see how well we are actually doing. Yeah, so maybe I could just go to, you know, the impact so that I don't waste too much time. Stella, so some of the high impact.
Stella, just so I also am giving you kind of the 1-minute warning, but if you could just give a few examples of the high priority, high impact actions that Bank of Zambia has, because I think you have a comprehensive list also, but for the audience, if you could pick maybe a few that are most top of mind for Bank of Zambia and going into the.
Okay, so some of the high priority and high, like I said already, we have the system that links the Bank of Zambia to the financial sector, and we're collecting that information and using it. So one of the key areas I could speak about is the board composition, for example, in terms of you know, female and male ratio, I think another innovation has been the sandbox, which is now available under the central bank. I'm sure most of you know what a sandbox is. It's basically giving giving the sector, or giving a chance for innovation in a relaxed regulatory environment. And so women are applying, and we also want women-centric products and designs. So like I've written there, like credit, pension, insurance, but women, women-centric types of products. Yeah. So those are some of the policy changes. I think we also have a national strategy on financial education. I think one of the bigger areas of need was the lack of usage of these formal financial services. So Zambia has embarked on a flat out, endeavor to educate on financial education, basically. So yeah, so that's another key area. I guess I could just stop with those, so I don't really I don't go over my time. But just before I end, maybe I'd also want to talk about our credit market monitoring program that looks at different data and then the data collection and analytics platform, like I said, that uses that is an interface or a platform that runs these analytics. So runs the different types of information that the banks input into the system. So that has also helped in terms of our policy decisions. So I think I'll end there. And thank you very much for your attention.
Thank you so much, Stella. This was really a great presentation and a great kind of follow-up to Effie's contribution also. So I don't see any questions in the chat. I just want to remind the attendees, I really encourage you to think about your questions. We're going to have probably a limited time for questions at the end. So I really encourage you to post them now, either in the Q&A or in the chat, and we'll make sure to get to these. So I will hold off on my own questions for now until the end, so that we have time to hear other experiences. But now what we're going to do is really shift gears a little bit. So we have seen some examples from Effie and from the Bank of Zambia on the use of outcomes for women financial inclusion, women-focused financial inclusion. And now we're going to shift to another set of examples with Luis and Mariela. So first, Luis is going to give us some examples of the use of outcomes, the data for improving consumer protection regulation. And then Mariela is going to give us some examples of the use of outcomes also to deal with the challenges of the COVID-19 pandemic. So without further ado, Juan Carlos, let me hand it over to you.
Thank you very much, Isabel, again. And so I would like to share with you in this presentation the main components of a promising new customer-centric approach to consumer protection that SICAP has recently developed, based on what we've recently observed in multiple jurisdictions. The starting point of our project was a question on the effectiveness of consumer protection. We recognize that the traditional consumer protection approach has played an important role. Regulation helped set minimum standards at a time when none or very few existed. Understandably, policymakers focus on quick wins or short-term rules on disclosure at the point of sale or rules how to handle complaints, but we've observed some limitations. From the customer side, some regulation put a stronger burden on customers to read, analyze, compare, and request information, and to identify bad practices that violated rules or merited their raising complaints. And still, provider misconduct continued. Further, number of detailed rules led providers to focus on very time-consuming, resource-intensive, tick-the-box compliance measures, instead of actually instilling a corporate culture of fair treatment of customers that connects customer value with sustained business value. And regulators have had to continuously catch up with emerging innovations. So as a response to these limitations, we've seen several jurisdictions setting up customer-centric consumer protection approaches that focus on the results or outcomes attained by consumers from engaging with financial services. And we believe this approach can help shift the mindset or paradigm of regulators and providers from a focus on providers and their compliance with detailed rules that minimize harm to a focus on customers and the outcomes that they attain from engaging with providers. The journey to set up this type of consumer protection approach starts with a clear mandate in law and regulation that anchors financial consumer protection regulatory and supervisory actions. Then regulators need to identify and define a set of customer outcomes, core outcomes that are appropriate to their context, and that are developed in dialogue with providers and consumers. Now, what do we mean with customer outcomes? We refer to intermediate outcomes, or the experiences and results that customers obtain from accessing and using financial services. These results are directly influenced by providers' products, delivery practices. These intermediate outcomes are necessary but not sufficient to ensure broader type of outcomes. For example, ensuring that customers become financially healthy or increase their control over financial situation, manage financial shocks, attain longer-term financial goals. In turn, financial health will also support even a greater outcome of empowering customers to capture opportunities and build resilience. In more specific terms, we identified 6 core common outcomes in our global research: suitability and appropriateness, choice, safety and security, fairness and respect, voice, and meets purposes. And we define these outcomes in a more customer-centric manner. For example, we define the suitability and appropriateness outcome as: I have access to good quality services that are affordable and appropriate to my preferences and situation, and I receive advice and guidance appropriate to my financial situation. So quite a customer-centric approach, and the same for the other type of outcomes. Now, once these customer outcomes are well determined, it is important to have a regulatory framework that supports that attainment of outcomes. Based on our research, there are 6 key regulatory elements. Our first group focuses on providers' interactions with customers. These are 3 main actions. Customer insights, where jurisdictions like Ireland ask providers to gather and analyze sufficient consumer information to understand consumer needs, objectives, and constraints throughout the product life cycle and customer journey in a way that allows for data protection and privacy. Second one is customer assessment and engagement, where jurisdictions like New Zealand would require providers to assess and engage with customers on an ongoing basis so that they offer appropriate and adequately understood financial products and services that fit customer preferences, situations, and needs. A third element is customer recourse, whereby providers have an effective system that generates good data analytics on consumer inquiries, complaints, and disputes, and takes swift action to eliminate issues. Also, consumers easily know where to raise a complaint or dispute. A second group of regulatory elements focuses on providers' internal processes. First, conduct and culture governance, whereby a provider's board and senior management set a customer-centric tone with a corresponding governance structure that carries a customer-centric role and responsibility. And in jurisdictions like Hong Kong, key senior managers are held accountable in cases of misconduct. The second one is conduct risk management, where explicit responsibilities on customer outcomes are assigned to managers, risk officers, compliance officers, and internal auditors, with corresponding focus on customers in management information systems and internal staff policies. Finally, on financial product governance, the emphasis is on principles and rules on product design and approval, and a process to gather customer feedback to improve financial products. And in some jurisdictions, regulators also have considered a direct product approval rule, especially in the insurance market. Now, regulation is not enough. Monitoring, supervision, and enforcement also need to become customer-centric. they should not focus on strict, detailed compliance per se, but instead take a step further and look at what kind of outcomes provider actions are generating in consumers, how providers are embedding customer outcomes into their corporate culture and business practices, and how staff's conduct contributes to customer outcomes. It is also important for authorities to develop a constructive dialogue with providers and consumers, including associations and consumer organizations. This is precisely what we aim to develop with our pilot for the South Africa's Financial Sector Conduct Authority. Here, we work with 5 providers to develop a set of indicators that the providers can extract from the data that they collect to show how well they reach customer outcomes, and that supervisors can use to assess whether providers are attaining these outcomes or moving in the right direction over time. So in terms of the steps quickly, the first step is agreeing on customer outcomes, which was easy in South Africa, as there was already a treating customers fair policy. Step 2 is translating the outcomes into measurable elements. In South Africa, we did this by engaging directly with 5 providers of different types and sizes to understand and analyze the indicators they collected to measure customer outcomes. Step 3 is to identify, pre-test, and select priority composite indicators that are highest impact and feasible to measure. In South Africa, we actually went from an initial list of 79 quantitative measures to a priority set of 20 indicators, prioritized based on their impact on meeting customers' purpose and the commonality of experiences that customers faced in the South African market. Step 4 is to collect data to test the feasibility and validity of the indicators. And the final step is to analyze the results, including benchmarks and trends, and to iterate the exercise to improve the indicators. And the next slide is just a quick example for reference of the set of top 20 indicators that we developed in South Africa. These 20 indicators are linked to the outcomes of suitability, choice, fairness, and respect, and voice. And you can see they are organized along the customer journey. Different steps of the customer journey are indicated at the top in the gray cells. This grouping helps providing a narrative and seeing how different indicators can be looked at together to better understand the customer situation. I won't go into detail in all of these indicators, that would take far too long, but I'll just tell you, keep an eye on our website, as we will be publishing more information on this exercise with all these results and some lessons from that pilot. Now, I just want to end my intervention with our main takeaways of the pilot and our work on customer outcomes. First, the customer protection approaches will need to evolve so that we are aiming to achieve better outcomes for customers and not focusing on just provider compliance. Our work also identifies that there can be a combination of some minimum levels of rules to minimize customer harm with more broader, higher level types of principles that look at the achievement of outcomes, and even some performance-based regulation. They all can meet and be together. Then FSPs have quantitative data that can be used to track key proxy indicators that measure progress on intermediate customer outcomes. Supervisors can actually collect information on these indicators and use it to monitor market level trends, risks, and provide their performance related to customers. And finally, progress toward better consumer protection requires validating indicators and monitoring the results over time, which can actually lead to industry benchmarks. Thank you.
Great. Thank you so much, Juan Carlos, for this very comprehensive walkthrough of also very practical steps, I think, of how you approach this. You know, once you decide that to move to an outcomes-based kind of framework, because yes, it makes sense. It gets you closer to the impact that you want. Just how to get there is a challenge for many. So thank you very much for walking us through that. And I'm sure that there'll be a lot of interest for the results on the pilots. So again, we won't have time to get into this in this session, but I encourage all of the audience to really reach out to the speakers, to all of our speakers afterwards to find out more details. I thought it was also a good, really great kind of example of expanding also the use of outcomes for an entirely different area than what we spoke about in the first two presentations. And along the same lines, I would now like to invite Mariela to share with us the experience of the Superintendencia de Banca Seguros e-MFP in Peru on the use of outcomes from a slightly different angle also. For addressing the challenges of COVID-19 and the consequences of that in digitization also. So Mariela, the floor is yours.
Thank you very much. First of all, I just want to explain where we are in Peru and what are the challenges that the regulator have to face, because things are currently changes. Our quarantine was very long and very strong, and it affected people, Peruvian people, during at least 3 months. Results, 74% of Peruvians are not doing well, and it was mainly due to lack of income. 80% have resorted to some financing mechanism, and 1/3 of Peruvians use for credit instruments. So it affects directly to people, but also to financial system. Because of clients, the type of clients that were served by microfinance institutions, they faced the biggest drop in flow of new debtors. A situation just started to reverse months after. However, during the quarantine, almost nobody new client went to these kind of institutions, microfinance institutions. Other things that we start to see in the financial markets, it was a change in the whole financial ecosystem. Next slide, please. What we saw is it was an increment in digital banking payments. People start to have fear, be afraid about cash. They prefer to use other channels, digital channels. Actually, what we saw is mobile banking increased very fast, and it wasn't reversed after the quarantine just was at the end. What we start to experience in my country, it was a change in people's behavior. We also see they not only use other kinds of channels, digital channels, but also they start to jump to other kinds of services, financial services. We just launched our first e-wallet in 2013, and during the time, we couldn't see a big spread of this kind of services. However, during the last year, what we saw is that almost 40% of population that already have bank accounts start to use also e-wallets, and 3 or 4 people uses e-wallet more frequently, and this kind of products start to jump and increase very fast. The result of people's behavior of what happened in my country is that financial services have also to start to change all their strategies. They, as we saw since the last year, they start to produce new products, mostly of them digital. So the number of products currently or in the market during the COVID period was increased. People have to develop new abilities to deal with this new environment. So all the ecosystem change, people change behavior, financial system start to change strategies, and regulators also have to adapt to these changes. In that sense, regulator started to move very fast, faster than we usually do in the past. We have to deal simultaneously with many different issues. From one side, we have to keep stability on the system. Next slides, please. Just giving the institutions the opportunity to continue their services during the quarantine and after that, during this big hit in my country, giving them some kind of flexibilities and allowing them to start to develop new kind of products, allowing them to move in an innovation environment, but at the same time giving people or keeping people safe and security. So we have to deal with the stability on one side, trying to keep integrity in the system, moving because we have two mandates in the financial regulator, from one side prudential, on the other side market conduct. So we have also to keep people safe, to protect financial consumer protection, to protect people, we have to not only to restructure loans, allow institutions to restructure their loans so that they could afford the crisis, but also give some kind of rules, principles that the institution has to follow, trying to keep also people safe, trying to keep payment change, keep solvency and liquidity. So at the same time, the regulator had to deal with trying to keep stability, integrity, financial consumer protection, and also inclusion, and have to move and coordinate with many different actors so that we could make this possible. Next slide, please. What we saw also is, because I said all the environment change, people had to develop new abilities. So we have to jump very fast to change our financial education programs, to move from a digital way and trying to reach more people, because frauds start to increase because of these changes in the digital environment. So we also have to move to schools. We have to coordinate with the Ministry of Education so that we just give all the material to the minister to give to more than 6 million children in my country to some kind of elements so that they can develop their knowledge, their financial education as a whole. They're giving them abilities and capabilities to change their attitude about what is happening in the market. We also have to develop digital e-learning platforms, put all our material in the digital national library, because it was used by many people in my country, and because not everybody has to reach just using digital channels, because we also move to a more aggressive social media strategy, giving and prevent people from frauds, prevent people to think about these new kind of services that appear in the market. We have to move and create and train public officers in regional and local authorities. And we just cover more than 50% of the district in the country, training these officials because they were the ones that have a contact with people in this very strong environment. What we saw as outcome at the end is not only changes on people behavior. We follow what happened with all these rescheduled loans, what happened with the friction started to appear in the market. What we saw is that at the beginning of this COVID period, many of clients of the microfinance institutions, mainly micro-entrepreneur and consumer loans, have to be rescheduled. People couldn't afford the loans as it was before. But how I mentioned previously, we put rules that financial institutions have to follow in order that these rescheduled loans try to fit people needs and not only financial institution needs. So it was very challenging, but at the end, what we saw is that the number of complaints reduced to previous years, to the previous year. We are just stop with this increment of complaints we have to face. We have to change the reports that were given by financial institutions. Actually, our reports, we start to think maybe quarterly or once a year, even monthly, could be not enough. So we are changing the way to capture and analyze data so that we could perform and improve our regulation. We have this reduction. We have also an increment in number of people savings accounts. Before COVID period, our level of adults with a saving account was around 42% of Peruvian population. 1 year after, it was jumped 10 percentage points. It's currently to 52% of adults have a saving account. And this last month, because of a coordinated strategy, we could open more than 1 million savings accounts from Peruvian population that was previously non-banking, not having any access to people. So what I want to say is that for the regulator, it was very challenging move to an outcome driven regulation, just putting the customers on the center of our regulation, because we at previous with this period, we were most focused on financial institutions, on their stability. However, things change very fast. People demand more about the regulation. They ask us to explain the regulation we are enacting. We have to use social media to explain what we expected, so that people could understand all the scope that we are trying to cover during this period of time. We saw how drop the number of rescheduled loans, for example, from almost 80% of micro entrepreneurs that have to reschedule their loans. Currently, they are less than or around 10%. So they could afford all these rescheduled. And now I think we are trying to pass this critical time that financial system and Peruvian citizens have to face during the COVID period. This is what I wanted to share.
Great, thank you so much, Mariela. So this was really a very nice end to the panel and complimentary, and I think it illustrates very positive trends of increasing the communication between the regulator and the providers and also the consumers, and how a customer-driven approach and an outcomes-driven approach can really yield results that have kind of that make a bigger difference also in people's lives. So we do have one question in the audience, and I see that it's already been answered. So we run out of time. We have no more time, but I encourage, so I thank Amelia from Grameen Foundation for your question, and thank also all the audience and the panelists for your contribution. I would maybe close in saying that there are a lot of resources that have been mentioned by the various panelists today, from FE, from CGAP, also the of Bank of Zambia and of SBS. So I encourage you to go check out these resources on specifically women financial inclusion. Also, I would be remiss to not mention the work of FinEquity, and FinEquity just published recently a gender data brief that also references a lot of the FE publications that have been mentioned. So I encourage you to go check out that resource also if you have not, if you're not aware of it. But again, thank you so much to everyone for your active participation. Thank you for the panelists. Thank you for European Microfinance Week. And I wish you a nice end of the conference. Thanks very much. Bye, everyone.